So MetaStock is a company I currently own. It's one of my top 5 holdings. It's a stock I'm also down on. Up until recently, I was buying into MetaStock as recently as 2 weeks ago. Am I still buying? That is the big question. What's my recent, most updated thoughts? All of that coming in this video. We're going to give a deep dive into Meta's financials and my worries, but moreover, my price target potential with this business. I'm going to be using Stock MVP, a platform I have helped develop and help build from the ground up. It's a program I am absolutely proud to present to you. And if you want to sign up until Christmas Day, there is currently a coupon code of 25% off on a monthly plan down on the pinned comments. Just go ahead, check it out, and you can lock that in for life. And on that as well, the $20 a month, we will be looking to increase soon. So if you are thinking about locking it in, go ahead and do so. Now, we need to go over and look at Meta. Luckily, I have this company saved on a watch list. Now, Meta Platforms, if you didn't know, is getting absolutely annihilated. If we look at the advanced look, we can see it's down 64% in the last 12 months, which is too much. It's too much to take as an investor. I don't mean it's too much to go down. Now, one of the things you can do here that not many people know about, we added this Form 10 file. So if you click this button here, it will actually come up with the latest filing for you, which is a cool little feature not many people are seemingly knowing about. Anyway, Meta Platforms. So the short interest, 1.5%. Not many people are shorting it because I think everybody understands this company is going to do well in the long-term future. Mark Zuckerberg, the android that is basically trying to move everybody to live like Bruce Willis did in Surrogates, where we live online and listen to Justin Bieber talk about how much money he lost on an NFT in a virtual reality. Now, the downside of this is it's going to cost a lot of money. They're not the only person to come up with this idea, and they're not the only person investing in it. But moreover, the first part, it's going to cost a lot of money, and it is. And until that disappears, people are going to try and avoid this company. So the other aspect of Meta is the fact that its earnings are going down because people are advertising less, and that will probably continue into next year. Now, let's look at my cards. If you are on Stock MVP, the reason I created these cards, this is where it all started, was so that I can customize them and I can get a quick insight into the company in seconds, seeing if it meets certain criteria for me. It's like a sort of reverse screener. So I just put a stock in, I can fully customize them here. I could click whatever I want here, for example, and then I can put a name in and it will save and it's good to go. There is a feature coming soon as well where you will have a drop-down menu like this. You can save as many as you want if you're a founder, or 3 if you're a monthly subscriber. Where you will have mine and Tom's just as a default feature if you wanted to save it too. So anyway, coming into it, Meta, my cards. The revenue is up. Even with the horrific year it's had, the revenue is still up 5%, which is insane. 118 billion is a very hard number to beat. They might not beat it next year. Net income, 28 billion, down 28% year on year, mainly because extreme investments into the metaverse and drying up cash flow. The free cash flow has also been beaten up, 26%. But I ask you this, sirs and ladies, and everything else that's watching. If Meta is only down 26% year on year, we were either extremely overvalued in this region here. Let me just draw that in for you. Either extremely overvalued in this region here because we fell 68% from this point. We fell 68%, and yet the net income's only down 26%. So the market is expecting Meta to even lose more money than it has in the past. So let's go back to the cards. Shares outstanding. Meta is rewarding loyal investors. If you'd have bought this company 12 months ago, they've actually bought back 4.69% of shares, meaning you own more of the company. They've got a quick ratio of 2.3. You do not know how good this is. Over 1 means the company can afford to pay off all its liabilities. I know it's not a perfect analogy of what a quick ratio actually is, but in essence, that's what it means. And it means the company is in good financial stead, and a quick ratio of 63. 63% basically of their debts could be paid off instantaneously with cash or short-term assets that they have in the bank. Net profit margin, 24%. That's could be a lot higher for a tech company, to be honest, but again, they're spending a lot of money. This is insane. Price ratio, historically speaking, anything less than 20 is good. 11.11, insane. Price to free cash flow of 12. Again, utter insanity. This company, from a valuation perspective, is looking pretty good, other than the fact of these two here. I'd want to know why they're losing money, but I already know, and that's because of the metaverse. Now, let's look at the insiders. Let's see what the smart money, so-called smart money, is currently doing. Now, Meta, again, popular stock, over 60% of institutional investors own it, 75% to be precise, and 24% retail investors. That's actually pretty good. It's what I like to see. Vanguard owns 6%, BlackRock owns 5%, FMR owns 4.2%. And the insiders. This is where we need to look a little bit deeper. Some insiders, you naughty little buggers, have been selling. Some have been buying though, but that could be Christmas rewards. Now, on the institutional ownership side, there has been a few jumps here. So I don't know if that is real, but that is an insane jump. So I want to go and check out that data there too. Now, if we scroll downwards, we can look at what the insiders have been doing. Now, we have had some sales, chief legal officer. That's worrying. Maybe there's a legal procedure coming very, very soon. Maybe, who knows? But they are selling a tiny amount, 342 shares there, and they still own 26,000. So nothing really too much to write home about there. All the sales, in fact, are relatively small, I'd say. No one's really selling out fully, other than Chief Technical Officer sold everything he had. I don't know if he left the company or what, but that's something I'd like to look into. If you want to buy this company, that's something you should know. There was also Nicholas Clegg, who was the global president of Global Affairs. He's sold out as well. Again, something you should really look into. But there's nothing too crazy here. So you'd want to go and do some assumptions on that. The analysts. Let's look at the analyst ratings here now. We're currently at 119. The lowest target is 105. Price consensus is showing a 100% near upside. High target of 146. That guy could be on crack. Let's see. And let's do a DCF model. So anyway, let's go ahead and do a DCF calculation and see what we should be paying for this business. It's the most popular page on Stock MVP because we get a price target where we should be looking to buy the business. Now, the first thing we need to look at is the EBITDA. Currently, it has 44 billion. It used to be 55. I'm going to make the assumption that continues falling, and I'm going to put in 38 billion. Again, I'm assuming now that the company is going to continue slowing down for the next year and then start ramping back up. But because we're putting in that assumption, I'm going to put in a 20% EBITDA growth rate. Now, I could put in the last year's assumption and put in maybe a 5% EBITDA growth rate, but I think it makes sense to sort of go backwards and start from there. It's just a little bit more conservative in my head. It could just be 6 and 2 threes. Depreciation and amortization, this figure is going insane, 50 and 6. It'll probably get under control. I'm going to put that at maybe 12. And the CapEx growth rate is insane. We're going to have to make an assumption here. I'm going to put this in at 15. Populate, and then a long-term growth rate. I'm going to put at 4%. It's an established business, so I'm going to put this at 10. And I'm going to click calculate, and all of these numbers then fill in. And it's showing me that MetaStock, I don't know why I said Tesla. It's because I just recorded a Tesla video, is undervalued by 12%. So, does that mean you should go and buy MetaStock? Absolutely not. For me personally, I think the tech space in sort of a geopolitical sense and a macro sense is going to continue falling downwards. This business, though, was once at $89 or even lower. So if you can get it under 100, I think Meta is an absolute steal. I don't think Facebook is going anywhere. I don't think Instagram, WhatsApp, and these other businesses it owns are going anywhere. And I think if they do get it right with the metaverse, it's good news. They're going to make more money. But I think the more likely outcome is in the coming earnings, Zuckerberg's going to have to listen to shareholders. They're going to slow down the spending they have into the metaverse. And if that happens, I think the stock will rally. So my plan with this, being truthful with you, is to sit and wait. I want it under $105. I've got alerts in at 105. I might pick up occasionally a few shares, but under 105, I'll be picking up a lot more of this business. What do you think? Let me know your price targets down below. And do not forget the pinned comment. There's a current 25% discount that ends Christmas Day for Meta. If you want to go and check it out, you can. And one thing as well, congratulations to everybody who joined our live stream last week. There won't be one this week because it's Christmas in a couple of days. Someone won an iPad. Three people won $100 on Amazon. And third place, someone's got a dinner date with Tom. We also give away $1,000 in Amazon gift cards, various other things as well, like free passes. I give away 2 bottles of whiskey. Even Gabe volunteered as well and give away 2 one-hour call sessions with people to get a more bigger look on the market themselves. Now, the reason we're doing these giveaways is not just to give back to the community. Yes, we want to do that. I mean, some fella just from Belgium, by the way, signed up, congratulations again, paid $100 per year as a founder and won a bloody iPad. So he's obviously very happy. The whole point of this is you get a ticket. So every month you're subscribed to, every year you're subscribed, your tickets build up, and every month we will give away something like an iPad, calls with Tom, and so on and so forth. And the prizes will get bigger as we grow. But the whole purpose of the prize giveaway was to get people to come onto the stream because we want you to donate money. Yes, we're a greedy organization, but every dollar we raise in super chats on YouTube, and if we find an easier, cheaper way to do it elsewhere, we will do it elsewhere. But every dollar we raise goes to feeding America. We even pay the 30% YouTube keeps on the super chats. So far, we've raised just under 5,000 meals. And it is a great feeling knowing that we have given 5,000 meals just before Christmas in the winter to such a great organization. So if you want to just subscribe to this channel, that's all I'm asking. Tune in to our live streams. During the live streams, you can donate anything above $5 as it currently stands, and we will review any stock in turn for your kind donation. I just wanted to say, I'm recording this video 2 days after the live stream, and I'm completely humbled that even at the end of the stream, people were just donating money, not asking for stocks. It is really rewarding to me as a content creator and as somebody who helped create this amazing platform. We're building such a tight-knit community. So from the bottom of my heart, thank you, and have a great Christmas and holiday period. And I hope 2023 brings you everything and more you could ever wish for. Thanks again for all your kind support, and I'll see you in the next video.